Hi, I'm Adam DeSanctis. Welcome to MBA Now. I'm here today with Mike Vough of Optimal Blue to discuss how lenders can increase their profitability by leveraging Optimal Blue's data. Mike, thank you for joining us today.
Thanks for having me, Adam.
So at Optimal Blue, it's my understanding you guys have extensive data and insights on trading and originations. What are some notable trends you're seeing right now?
Yeah, I think the first part is to step back and zoom out at the market share that we have. So in today's environment, we have approximately 40% of the originations running through our product and pricing engine, and we have about 40% of the hedgeable loans in the secondary marketplace running through our system as well. So we could really tell a really interesting story about what's going on in the origination space right now. And the biggest thing that I'm seeing is that from 24 to 25, we've seen a big pickup in the percentage of loans that are being originated that are jumbo and non-QM. It was 10% in 2024, and now it's about 20% in 2025. And we're seeing a large market share go away from your conventional 30-year loan, about 50% down to about 40% over that same time period.
That's an interesting shift, and you and I were discussing before this interview started. It's been a couple down years for the mortgage industry with a higher interest rate environment. What are some trends you're seeing right now in terms of profitability of their lenders?
Yeah, one of the main things that we track based off that data is an index we call OBMMI, or the Optimal Blue Mortgage Market Index. And what that is the average note rate that is locked in our system on a daily basis. And so we've seen that trend down. This morning before I got here, I checked, it was at 6.56. I think 6.5 would give a lot of folks a lot of gun shooting off and cannon shooting off in some places to help with that and celebrate that. But right now we're still seeing profitability low. So we track OBMMI to the mortgage-backed security market, and that spread between those two is still historically low. On average, it's about 1.25, that spread. It's about 1.1 right now. During the pandemic, we saw that up to about 2 points or even 1.75 at different points. And we've seen now, over the last 2 years, anywhere from 90 basis points to that 110 level I mentioned earlier. So lenders are still not making as much, but we're starting to see a little bit of a tick up from those lows of about 90 to about 110 this morning.
Hopefully we'll see that continue to go down. I know this morning MBA reported that the 30-year fix is at 6.7%, and we're expecting that to go down as the year continues. So let's shift a little. I know Optimal Blue has announced some exciting partnerships lately. Can you tell us about those?
Yeah, definitely. So we recently announced a strategic partnership with Cotality, formerly known as CoreLogic. And what we're trying to do with them is really partner our mortgage data with their real estate assets. And they have really interesting end use cases, even in like the securitization space. So I mentioned non-QM and jumbo production going up. Well, the secondary market for that's very different, right? There's different buyers, there's different outlets, and they have exposure there that we don't have, and they also have exposure in the real estate side that we don't have, and they don't have mortgage exposure that we do. So if you think about that triangle of data there, it really tells a really full and compelling story. And that's one of the ones we just announced recently. But previous to that, we also announced a partnership with the Chicago Mercantile Exchange, or the CME, on creating a tradable future based off our data. So I mentioned OBMMI before, and I mentioned that primary-secondary spread. Well, when OBMMI moves, it doesn't always move with the treasury market that you might see on CNBC or even TBA screens that you see on Thomson Reuters or Bloomberg or other services like that. It moves a little different. It includes that primary-secondary spread, which is the mortgage lender's profitability. So when mortgage lender profitability moves counter to those other markets, there's problems for hedgers. And so we came up with this mortgage rate future in partnership with the CME based upon our data. And we released that at the beginning of this year, and we've seen some really great market adoption there. And we think it's a really awesome instrument for people who are trying to remain more profitable, right? You need the most dialed in hedge possible to ensure you're making your profitability levels. And we really feel that mortgage rate future gives that for folks.
That's fascinating. I think that'll be very useful for a lot of lenders out there. Mike, I've really enjoyed this conversation. Where can our viewers go for more information?
Yeah, you can start at optimalblue.com, or you can even follow me on LinkedIn. I post stuff weekly, so give me a follow, but you can always reach out at optimalblue.com.
Mike, thank you for starting by.
Appreciate it.